Are you there?
Yes, I am here. Are you there?
I'm here.
All
Oh,
right.
somebody just tried to call me, so that's why I ignored it.
Okay. All right. Hello, everybody. We are officially live. It is 4 o'clock on the dot, so we are not behind. We are ahead of the schedule, or actually, I say on schedule. Um, we're here today for our new coined phrase, Mortgage Monday, to give you guys a little bit of
Woo!
information about the mortgage market and kind of what to expect and what's going on in general. Our guest today is Teresa Rutherford, and she is a longtime mortgage consultant. She's been with multiple banks, Wells Fargo for the longest time, and now she's with Caliber Home Loans, who is a great mortgage company.
Yeah.
We've loved working with you all, and our clients love you. So thanks for joining us today.
Thank you for inviting me. It's awesome. It's a great time to be in real estate and mortgages.
Yes, a little bit crazy, but still very good.
That's right.
So,
That's right.
gosh, it's not as crazy as it was a few weeks ago. I remember us having a phone conversation a few weeks ago, and you were literally like, "This is the craziest it's ever been." Interest rates were going
Yes.
from, you know, 3% to 4.5 to 5 to 2. I mean, it was all over the place, and it's certainly
Yes.
not that crazy right now. But things are changing. Things are a little bit different, and so I just wanted to jump on and kind of talk a little bit about it, so that our viewers could maybe get some insight into what the market is like in case they're interested in buying this summer. So,
Sure.
I guess kind of give us a general synopsis of how all of this has changed the market and why it's changed it.
Well, back about March 2nd, when we started hearing about the COVID, all of a sudden you saw a huge decrease in interest rates. Because everybody was selling off on stocks, they were putting all their money into the bond market. So for about 2 weeks, we saw really, really low of interest rates. Then all of a sudden, like you were talking about, we had this crazy time
Right.
where we would have 5, 10 different interest rate changes in one day because nobody knew what was going on with the world, to be
Right.
very honest with you. And that was making a lot of changes in what the market is. Now, over the last couple of weeks, we've seen a settling of interest rates. And I've been in the business since 1986. And I will honestly say this is the lowest I've seen in interest rates
Yeah.
since 1986.
Yeah.
I mean, when you're looking at rates in the twos and the threes, I mean, what better time to purchase a house
And
when you
you,
have the lowest all time interest
yeah, I
rates?
mean, and correct me if I'm wrong, but in the 90s, they were like super high. I mean, in the teens, right?
Mm-hmm.
Which I,
90s, no. In the 80s, they were in the teens. I
okay.
remember quoting somebody a 1 year arm at 10% interest rate, and they loved it.
Holy cow.
So,
Yeah.
so obviously,
Different
it
times.
definitely is a different time. So, even a year ago, they were 4.25%, 4.5%.
Right.
So you're seeing people wanting to refinance now that even purchased a year ago
Right. Yeah, I actually
because the
realized
rates are
that.
lower.
Yep. We have an investor who purchased two rental properties last year, and I had heard that they were refinancing, and I was like, that's pretty
Mm-hmm.
stellar. One, to have the equity to do
Mm-hmm.
it, but two, to know that the interest rate has changed that much.
And that's one thing that's been very surprising too, is people that we have that we ended up going ahead and closing a year ago, they do have equity in their property still to refinance.
Yeah.
And I'm not talking about military because you don't, VA interest rate reductions, you don't have to have an appraisal, but the other ones you do, and their values are coming in higher than what they purchased for.
Yeah, which is
So that's
fantastic
a good
news for
sign.
everybody. Yes, absolutely.
Mm-hmm.
So tell me about, I guess, right now, if somebody wanted to purchase, are all the different programs available right now? I know that's a myth out there that, you have to put 20% down, and there are a lot more strict guidelines on who they're giving a loan to due to COVID. Is that true, or is there a little bit of truth to that?
There's a little bit of truth to that. Each mortgage company has different overlays, is what they call it in the guidelines. If you call VA or you call FHA, they're going to tell you they don't have a credit score because truly they do not have a credit score
Right.
requirement, but each company has their own credit score requirements. So there has been a little bit of an increase in some credit score requirements going from possibly a 580 to a 620 for FHA and VA. We've heard some companies going to a 640, 660, 680. So you definitely got to check with different companies. There's still VHDA out there, so you still do 100% products with VHDA out there. Not every company is doing that either. Right. So again, check with different companies. There's still 3% down and 3.5% down. So there are a lot of products out there. Have some of the credit scores increased? Possibly a little bit. Yeah. But not to the point where the people can't purchase a house.
Right. What does somebody do if they're self-employed right now? How is that affecting them? How is it affecting business owners who, do they then have to provide new documentation as to if their business is open right now? How does that work?
At the time, right before closing, one thing COVID has done, whether they're self-employed or they're not, we have to do a 3-day verification of employment. Mm-hmm. So even if you're a salary employee, we have to verify that you're still employed. Mm-hmm. 3 days prior to closing. On a self-employed person, there is a little bit more documentation. If you don't want to give us update or like a P&L or anything like that, then we would take 25% reduction of your income. Mm-hmm. And that's what's required. That's a Fannie Mae and Freddie Mac requirement, by the way. Mm-hmm. So if we can reduce your income by that amount and you still qualify, there's nothing else that's needed. If not, then we would end up needing to have a P&L and a balance sheet. Does not have to be audited. Right. So, because, but the other thing that's required is to verify your employment and to verify that you're still making money is we would require you to end up going ahead and give us an updated bank statement to show that there's still deposits going into that bank account.
Right. Okay. Now, obviously, COVID has affected that. What other things has COVID affected for you? Have you seen like through the market, especially with, I don't know if you've seen what we've seen, but in most of our buyer situations, we're running into multiple offers because nobody is putting their houses on the market right now. So our inventory is extremely low and our buyers are house hunting and putting offers in right away. And there's still a lot of other offers on the table. So we try to advise our clients to try to do everything they can to put their best foot forward. Have you seen that as well? And what would you advise buyers?
Definitely. Matter of fact, today I got a phone call that there was 10 offers on one house, which really surprised me. It kind of reminds me back, was it 2006, 2007 when we started seeing that. But especially in certain price ranges, you're seeing multiple offers. Exactly. Yeah. Definitely multiple offers. I always suggest to a customer, if they're looking at purchasing, to do a pre-approval and then possibly even the full approval, where if we needed to go to underwriting to actually get it reviewed. So if there are some challenges on their credit report or some questions, you can actually go ahead and send it to underwriting and get a full approval. Sorry about that, a commitment letter, or just going ahead and doing the full pre-approval and getting documentation from the customer.
Right.
And to verify their income, their assets.
Yeah. What does that documentation look like? If somebody's today watching this and they're like, okay, I want to go ahead and purchase in June. Let me call Teresa or whoever to get pre-qualified. What do they need to start looking for and digging through while they're at home, in their file cabinets?
Yeah. 1 month of pay stubs and 2 months of bank statements and 2 years of W-2s. Okay. It's not hard. Okay. It's very easy. And a lot of people's pay stubs are online. Right. And most people's bank statements are online. So all you got to do is send us a PDF and it's verifying everything. So like our pre-approvals will say if we verified everything, if we verified your bank account, if we verified your pay stub. So it gives that listing agent kind of validity that, hey, this person is approved. Right. And to have the actual approval versus a pre-qual makes a huge difference.
Yeah, because I can't tell you how many times as a seller's agent, as a listing agent, I'm calling all of the buyers that we have in line as multiple offers, and I'm asking the lender, I see this pre-qualification letter. Have you verified anything? And they say no. So they've taken what the buyer has told them their income is. They've taken what the buyer has said, their, debts are or whatnot, but the only thing they've done is pull a credit report, which does mean something. I don't want to, act like a pre-qualification doesn't mean anything. It does. It is one step above nothing, but one step above that, if you want to make your your offer stand out in a 10 offer situation, that's going to be that game changer.
Right. Very much so. The other thing, and hopefully I don't step on your guys' toes to a point, but the other thing I always let people know, especially with it being should us having very low listing inventory at this point, is don't try to hit the seller both ways. So don't try to go down on price and go down or ask for all the closing cost. And I'll ask a buyer, how much do you think $1,000 difference in price is going to make in your payment? And probably every single time I hear them say $50. Well, $1,000 only changes your payment about $4.35.
Right.
So if you need to go to the actual asking price and then ask for the actual closing cost in the contract, you're only changing your payment, by maybe $20,
right,
or something like that, according to what the price is. Right. So don't hit them both ways, especially with such low inventory.
Yes, absolutely. I think that's really important, putting your best foot forward, because the reality is, there is going to be more houses coming on the market, but at what rate and at what time do you need to be out of your house? And if this is the one you really love, you really do have to put your best foot forward, because you're not sure if another one is going to come up that you're going to like so much. And we try to kind of guide our clients in that realm as well, just looking at statistics and showing our buyers, really what is expected in this price range in this city, because every city is different. Every neighborhood is different. So some people, some neighborhoods may be getting 100% of list price and only paying half of closing cost. Some neighborhoods may be getting 95% of list price and half of closing costs. So there's a lot of different things we can look at, but I think you're right. Getting fully proved, putting your best foot forward offer, even escalating offers are happening all the time now. So we're seeing escalation clauses like crazy. So definitely some good advice there.
May I interrupt for a second, Shannon?
Sure.
The other thing too is, say if somebody is selling their house and they don't want to make it contingent, and they have a lot of equity in the sale of that house, but they have enough to put down 5% or 10% without selling it. If they go to sell that house afterwards and they decide to put a lump sum of $20,000 or $25,000 down, they can re-amortize their loan. So what that means is they would keep that same low interest rate, but we can lower their payment for them. And usually it's about $150 charge to do that. So that's a lot cheaper than actually going.
Yeah.
Exactly.
Okay,
so it's a lot cheaper than a full refinance.
Repeat that again. If somebody closes, and then how short of a time does that have to be? Or how long of a time can it be?
And it's only conventional. Let me point that out. VA and FHA doesn't let you do this. So only conventional. There is no time frame. Okay. So if in 6 months and 1 month and a year, they have $20,000 that they want to put a lump sum down. So not over an increment time frame, but a lump sum down of $20,000 on their principal. Then they can call. I always say, call us first. Say, I want to put this lump sum down, and then we'll tell them step by step what to do. And if once they do that, we will re-amortize their loan over the time that's left of their loan period. So if it's 340 months compared to 360 months, then we re-amortize it at that and change their mortgage payment.
That's amazing. Okay.
So it's a win-win for the customers.
Yeah, very cool.
Great way to sell. Yeah, so great way to have non-contingent contracts.
Yeah, absolutely.
If the person has equity in the house.
That's very good information. Very good information. What else, I guess, can you say about the market right now? And, obviously we talked earlier about how it's a great time to buy because interest rates are so low. How do you think, or how have you heard through your business, how is that going to change? Or do you think it's going to change?
Right now, what we're hearing through our economist and just through, national associations is they think rates are going to stay low this year.
Okay. They
don't rates to increase. They say they may go down some, and I'm thinking, how much further can they go down? Yeah. Really? Yeah. To be honest with you, you're in the low 3s or high 2s, but they're expecting them to stay steady. Kind of think about it. We have an unprecedented market right now when you're looking at what's happening with COVID-19, something that's never happened in a long time since we've seen.
Right.
You have a presidential election.
Mm-hmm.
So every time, usually during presidential election years, they don't want to see rates go up.
Right.
They want the housing market runs a lot of the economy.
Right.
So they want the housing market to stay stable. And the way to keep the housing market stay stable or get better is by keeping lower interest rates. Mm-hmm. So they do not want to see rates go up. So they're anticipating right now the stabilization of rates and either staying where they are or going down a tiny bit.
Okay. Okay, well, that's good. I think that's good for
everybody. Why not purchase?
Yeah, yeah. Or make a plan to purchase. I think that's the key. That's right. Like, it's better for somebody, instead of rushing to purchase right this second, get your ducks in a row, start making sure your credit is right, which we talked about that a little bit before we got on the call, is, there are some people right now who are racking up debt because they're not getting paid. And so that kind of, like, for me is... I'm looking forward thinking, man, all these people who potentially were saving money to buy a house are now probably going through that. How do they get back on their feet after that? Like, let's just say they did rack up some debt and they call you and you realize that their credit score isn't necessarily where they need it to be. How do you all help them through that process?
We can actually go ahead and coach them. So we can do what they call credit simulation. So we run their credit report and then we put it through this credit simulation program that will let us know what they need to do to be able to improve their credit.
Gotcha.
A big thing that lowers your credit score is how much you owe on your credit card according to your high credit limit. So if say for instance, your high credit limit's $5,000, you owe $4,900, that's going to lower your credit score.
So you're talking about, when you say high credit limit,
owe.
You're talking about, let's just say I have a Visa Master or a Visa card. I don't even know what they're, a Visa card, and my credit limit, the amount of money that I can purchase on that card is $5,000. That's your high credit limit.
Yes.
And I have $4,500 on it. That's not good.
That's going to negatively affect your credit score.
It doesn't matter if I pay it off every month?
If you pay it off every month, if you hit it the months that you don't owe $4,500, it's going to help you than the months that you do owe $4,500. So it will, that little bit probably won't make a huge significant difference to your credit score if you have good credit and you don't have a whole bunch of credit cards that are up like that. Mm-hmm. But try to keep your credit scores at least half of what your credit limit is.
Okay.
And I'll tell people sometimes, and it's been interesting. We've done credit simulations and we'll tell people to go out and get a credit card for 3 or 6 months. And I tell them, don't go buy something you don't need.
Right.
Go charge a tank of gas and pay it off. Go charge a tank of gas and pay it off. Yeah. But we'll work with customers for a year, 2 years, however long it takes. If they're willing to do the work that we tell them to do, I'll work with them and keep following up with them to say, hey, have you done this? Have you paid this off? Just making sure that they get to where they want to end up being.
Right.
That's awesome. That's, if they're willing to do it, we're willing to help.
Yeah. And I really feel like that's...
And the credit simulation makes a huge difference.
I feel like that's one of the most enjoyable things is when you meet with somebody and like 2 years later, they have worked their tail off to be able to purchase a home. And you've helped them through that process. That's like, I feel like one of the most enjoyable clients that you can have. They really, really want to be homeowners. So I think that's so great that you guys do that.
And when you're at the closing table, when you hand them those keys as a real estate agent and I'm there as the mortgage customer, you see their eyes light up or them cry. Yeah. It's just...
But unfortunately, we're not allowed at the closing table right now. So it's
now we're not.
So unenjoyable. I swear, it's one of the worst things about this whole thing is that title companies, and for those of you who don't know, title companies are trying to regulate how many people are coming in and out of their doors and attorneys' offices. So they're only allowing the buyers to be at the closing table. And man, when you've worked your tail off throughout the whole transaction and you don't get to be there at that point, that is so sad. There's other times to enjoy each other, and we certainly don't want to add to the craziness. So we will respectfully adhere to their regulations, but it's definitely a bummer.
I tell you, we're glad that title companies and attorneys are still doing closings because there's some areas that you've seen some people that are shut down.
Yeah, that's true.
And there's some areas that So are they going to be able to get them closed? And luckily we can still record things
Yeah,
still.
that's right.
That makes a big difference.
Yeah. Well,
So big shout out to those title companies.
Yes. Thank you, everyone. So is there anything else that you can think of that is important for the borrowers to know right now in this market?
I think the biggest thing is just make sure if you do have a mortgage, try to pay your mortgage and don't do forbearances, because that some people think that they're going to do a forbearance and all of a sudden refinance. That's going to hamper you from refinancing. So if you decide to do that, please try to make that mortgage payment. Try to keep up even on the minimum payments on your credit cards. Don't be late. Contact your credit card companies, contact whoever you have installment loans for. If you can't make the payments, a lot of them are willing to help you out in this time. And so it doesn't show up on your credit report. That's a big thing. Contact me. I'll be more than happy to run and help you through any situation that I can help you through.
That's such a good point.
And give you options.
I feel like all we hear about is this forbearance thing. And I've had several people call me about it. And all I can say, and because I haven't really investigated it too much, but hearing you say that helps me a lot. I just say it just seems too good to be true. Like, these mortgage companies have to make their money. So basically what I've read, the little that I've read on it is that, yes, they'll give you 3 months off, but then they want that in a lump sum at some point, right?
Yeah, they're going to want the money back. I mean, because it's interest, because that's one thing that kind of caused a little bit of the issues with the interest rates too. It's because of the CARE Act and the forbearances. The mortgage companies are still having to make the payments to the government.
Right.
But they're not bringing the money in. So the liquidity of the mortgage companies
is dwindling.
It's not exactly.
Yeah.
So yes, if you have forbearance, it does not mean you're not going to pay that interest.
Right.
You will be paying that interest. It's just giving you a month or 2 months or 3 months in order not to have to make a payment and not show up on your credit report. And I guess I'm reluctant whether or not it's not going to show up on the credit report. They're saying it's not going to, and they're not supposed to, but I have a feeling we're going to have some challenges around that. Yeah. Of going back into some of the creditors to get them to show it accurately.
Yeah.
I mean, there's millions of people.
Yeah.
Yeah. So, but
that's very good information.
And you don't have to have 20% down. That's the myth. You do not have to have that. And VA buyers, 0 money down.
The interest rates
a phenomenal
that I'm
time to
quoted
purchase
on VA buyers are ridiculous. Like, the interest rates are insane. Like, what is the most recent VA buyer you had? What was their interest rate?
2.75.
Yeah, that's crazy. Crazy
on
good.
A 30-year fix.
Let me ask you this.
Yes.
Do you ever think that there will be a first-time home buyer, a first responder program like there is for VA?
We need one.
Just because I'm curious,
there's no doubt.
We are always about the first responder, and I know you and I, and if you don't know and you're watching this, we have a first responder program that is awesome.
Right.
We give lots of discounts. Teresa does a great job, and she gives discounts on her end. We have title company discounts. Mary Maids, Peninsula and Williamsburg, they give a cleaning discount, so lots of good stuff. But the VA program is so hard to beat. I mean, it's awesome. Why isn't that a first responder?
Hey, we'll do the VA plus the first responders program. Do it together.
Yeah, that's true. That's true.
No, I mean, what's going to be very interesting is out of everything that has come out with this COVID-19 is whether or not there will be something that will change with some of the first responders, because the first responders have put their life at risk with what they've done, with the EMTs, with the fire department, with the nurses. Yeah. Every single person that's in part of that. So maybe that's something we need to go to, our senators and stuff and ask for, because to be honest with you, it would be a great option for all those first responders. Look what they've done for us during this pandemic. what can we give back to them? And
right.
we've given some back, but not as much as what they deserve, to
Yeah, I
be
mean,
very
gosh,
honest
look
with
how
you.
long it took the first responders in New York City from 9/11 to get their
Hmm.
medical stuff covered. I mean, it would probably be
Right.
a long fight, but it certainly would be a worthy one.
Exactly. Yes,
So,
very much so. And I apologize. I'm on my phone, so sometimes my face gets where you can't see me. It's
oh, that's
because
okay.
I couldn't get something to turn off. So I
That's
don't know
okay.
whether it's working right or not.
Hey, I'm
You
just
guys, if you don't know
impressed.
me, I'm not the best tech person.
I'm just impressed that you're here, Teresa, and that you agreed to do this. And we're so grateful for you and grateful for your time. So thank you so much. I appreciate everything. Is there anything else you want to add?
Not that I can think of, other than your team is awesome.
Thanks.
So if you guys want to purchase, definitely give them a call. They support you for selling and for buying. They're phenomenal.
Thank you. I appreciate the shout
But,
out. All right.
well,
Well, I
anytime.
am sure we will talk more this week because we just have a few contracts this week closing.
Yes.
So I appreciate you.
2.75% interest rate.
Yeah, that's right. That's right. All right. Well, thank you. I appreciate
So,
your
well,
time.
thank you, Shannon.
I
I
will
appreciate
certainly,
it.
and for those of you watching, I will add Teresa's contact information into the comments below. If you think of any questions that you have and that we didn't answer for you today, please feel free to comment on there. And Teresa and her team will be very good about following up and making sure they get your questions answered. So thanks for tuning in to Mortgage Monday. We'll be back, if not next week, and within a couple of weeks for some more mortgage information. All right. Have a great day.
Thank you.
Bye.
See ya.
See ya.